Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, taking over the Singapore Daily Stock Market Digest from Wei for a few days. Today we're diving into some fascinating movements in the Singapore market. We'll break down the latest updates on ST Engineering, CapitaLand Investment, CLI, Yangzijiang Shipbuilding, YZJ, and Semcorp Industries. Let's get started. Let's kick things off with ST Engineering. This is a well-known name in Singapore specializing in defense, aerospace, and engineering solutions. Its ticker symbol is S63. As of Wednesday, its shares closed flat at $5.06. The company recently reported a strong set of results for the second half of 2024. Net profit surged 19.6% year-on-year to $365.7 million compared to $305.9 million in the same period last year. Revenue also climbed nearly 10% to $5.8 billion, driven by robust performance in its defense and public security segments, as well as commercial aerospace. To sweeten the deal for investors, the board proposed a final dividend of $0.05 per share, up from $0.04 last year. In terms of trading activity, ST Engineering stock has been relatively stable this week, with moderate volumes reflecting cautious optimism among investors. On the technical front, it's hugging its 50-day moving average, signaling consolidation after recent gains. Zooming out to the industry level, ST Engineering continues to benefit from global demand for defense and aerospace solutions. With geopolitical tensions remaining high and commercial aviation recovering post-pandemic, the company is well positioned for further growth. Next up is CapitaLand Investment, or CLI for short, trading under the ticker 9CI. CLI is a major player in real estate investment management and development. On Wednesday, its shares dipped slightly by 0.8%, closing at $2.50. CLI turned things around in its latest earnings report for H2 2024, posting a net profit of $148 million compared to a loss of $170 million a year ago. This dramatic improvement was largely due to reduced losses from revaluing its investment properties, a key factor for real estate firms during volatile markets. However, despite this positive swing in profitability, CLI's revenue growth remains modest as it navigates challenges like rising interest rates and slower property market recoveries globally. Trading volumes have been subdued recently as investors weigh these mixed signals. From a technical perspective, CLI's stock is testing support levels around $2.50, a critical zone that could determine whether it rebounds or dips further. Compared to peers like Mapletree Investments or Fraser's Property, CLI's recovery trajectory looks promising, but still faces headwinds from macroeconomic uncertainties. Now let's shift gears to Yangzijiang Shipbuilding, or YZJ Shipbuilding SGD, BS6. This Chinese shipbuilding giant has been riding high on strong demand for new vessels amid global supply chain shifts. Its shares closed at $2.68 on Wednesday, down 0.7% before its earnings release. For H2 2024, YZJ reported a stellar net profit of 3.6 billion yuan, approximately $659.3 million, marking a 50.5% jump year-on-year. Revenue also rose by 5.5% to 13.5 billion yuan during the same period, while earnings per share came in at an impressive 90.50 fen. The company has been benefiting from a surge in orders for energy-efficient ships as countries push for greener shipping solutions under tighter environmental regulations. Trading volumes have picked up slightly following its earnings announcement, reflecting renewed investor interest. On the charts, YZJ is showing signs of consolidation after a strong rally earlier this year. It remains above key moving averages, a bullish signal, but faces resistance around $270. In comparison to regional peers like Keppel Offshore and Marine or Costco Shipping Heavy Industry, YZJ stands out for its consistent profitability and focus on innovation in ship design. Finally, we have Semcorp Industries, trading under U96. This diversified energy and urban solutions provider has been making waves with its pivot towards sustainability-focused businesses. Its shares closed flat at $5.88 on Wednesday. Sembcorp posted a solid 14% increase in net profit for H2 2024, reaching $471 million compared to $412 million last year. This was driven by resilient performance in its gas-related services and integrated urban solutions segments, two areas that are central to its long-term growth strategy. Revenue for the period came in slightly lower at about $3.2 billion versus $3.4 billion previously, but this dip hasn't dampened investor sentiment much given the company's strong profitability metrics. From a trading perspective, Semcorp stock has been relatively quiet, but remains firmly supported above its 200-day moving average, a sign that long-term investors are holding steady. Looking at the broader energy sector, Sembcorp is well aligned with global trends toward renewable energy and sustainable urban development. Compared to competitors like SP Group or City Developments Limited (CDL), it offers a balanced mix of traditional and green energy assets that appeal to ESG-conscious investors. That wraps up today's Singapore Market Digest. We've covered some exciting updates across key SGX stocks, ST Engineering's solid growth in aerospace and defense, CapitaLand Investment's return to profitability, Yangzijiang Shipbuilding's impressive earnings surge, and Semcorp Industries' continued focus on sustainable solutions. Thanks for tuning in. If you enjoyed this breakdown or have questions about other stocks you'd like me to cover next time, drop me a comment below or send me a message on social media, the Investing Iguana. Until next time, stay curious and keep investing wisely.